relevant. But yeah, if I had a question, it would be within the name of the community of really looking at what I believe is a very, very valuable thing, and that is protected highs, protected lows, and where could a trader who has studied your content really looked at maybe some of those market structure insights that you've provided in the past.
Well, it sounds like you're talking about that Zircon model because that's what I was doing. I was shorting just below what anybody else would look for a continuation and run through that old high. I was selling, building in positions right as it was creating just a slightly lower high. And I'll give you some crumbs because it's something I want to hold on to the end of the year. Okay. But it's not a model that everyone's going to agree with because it's going to take a lot of experience and it's conviction. You got to know what you're doing or you're going to see lots of losses. But when it presents itself, it's when, well, we just came off the heels of the pseudo SMT. If there's things that warrant a reversal or a market has ran its course, it's done a nice run. There's no other reasonable expectation for it to go any higher. It's exhausted any previous range projections that would make any real sense, but it has an old high and it came off of that high. If the market rallies up and say you get an S&T divergence where it's a correlated pair, if it's 4X or if it's ES versus NQ. I'm not going to do this with YM. Dow can do a lot of squirrely things in and of itself because it's only 30 stocks. 2 stocks heavily pushed in that will make that whole index go crazy. 1 stock could do it, really. So it can create false signals, false sense of security, false pretenses, and price action. So it's not enough to validate or support an idea. But ES is 500 issues versus 100 issues with the NASDAQ. The weighting of it being tech in NASDAQ supersedes the disparity between 500 versus 100. So they are, in my opinion, close correlations. If ES fails to make a higher high, or if the bodies, like we just mentioned here, the bodies are failing to make a higher high than the previous high, you already have a stage for Zircon. So what you're doing is you're looking for a turtle soup to go above a recent high, okay, a recent high, but not take out the highest high in proximity. So if you don't know what I'm talking about, just go look at my little post. It's a video I have on my YouTube channel. It's a Zircon. Zircon is actually it's a missile, a really powerful missile. That's what I named it after. So it's kind of like always some kind of arsenal or some kind of something formidable. Okay, that was the way I've named all this stuff. You know, action guy, right? So it's running an old high, but leaving a high that everybody would use as a shorting opportunity with classic support and resistance. Anyone that uses the stuff I've been teaching that would expect that run out for a break above and tap out their long position and selling their longs to buy side, they're not going to get in. They're not going to get their fill. And it's just one of those perfect elements where it isn't going to go higher. There's so many things against it. There's so many supporting factors that I'm not going to go into detail here, but I will at the end of the year. It's a wonderful model when it presents itself. It looks too perfect. It's too pristine. Well, if you just look at the example, you can't get much better than that one. And it's a wonderful opportunity to be in control of your decision making, not be fearful. Oh, it's going to run that high, or it's going to stop me out. You know what they're doing. They're leaving bait for support and resistance traders, breakout traders, and even in my group of or school of thought where we run out highs and we sell our longs to that, or old lows, and we expect that low to be taken out and we sell to that, or we buy it back rather. There are times when the market is poised to negate every one of those things and just stay in a realm where it looks like it could do it, but it ain't going to do it. That's a reversal pattern. That is the most complex, difficult methodology for reversals that I have. And when it's there, though, the entries are putting you in at the high. A couple ticks off the high, but you're in there at the high because you can see that they're getting as close as they can. And you probably have experienced this before. You've been in a trade. You're expecting the market maker sell model to come to the relative equal lows or the old consolidation, and it's selling off. And you're like, okay, we're only a couple handles away, 20, 30 handles away. And you're like, this is going to be a matter of time now. It's just going to dump down there and get it. And all of a sudden, it just says, nah, I'm not interested. And goes the other way. And then what happens? It becomes an enormous buy. It completely blasts through smart reversal and keeps on going higher. That's Zircon. So there's conditions, there's characteristics that are there that I'll show you I look for that. So what it does is it defends me. I'm not always just going in there and just looking to short and high that isn't going to be taken out, or buy a low that isn't going to be taken out. I'm not stating that that's the primary function. It's actually an insurance policy for me to protect myself from expecting my market maker sell model or buy model when it doesn't come to fruition. A lot of times I'm taking profits. And if you go back and look at my executions, you'll see that I'm padding out partials, because I got the questions all the time when I was teaching the market maker models. They were like, well, if you know this is what's going to happen, why are you taking partials there? Why aren't you just letting it go down to full target? And then they would be trolling and whatnot. It's because there are some times that in my frailty as a human, or when the market in itself takes upon its own accord to go out there and just screw what I want to do in the marketplace, because it's a manipulated market. If there's enough liquidity in there to say, nah, we're going to reverse it here and run it the other direction, or geopolitical event takes place, anything can happen. But I'm always trying to take some kind of a partial on a market maker sell model and a buy model, because it could present a Zircon and I didn't pick up on it because of manipulation that comes in the marketplace. If they do something in the Middle East, they do something over here or there, something happens in the States, causes some kind of a reverberation, anything can happen. So to protect myself, I built in this procedure of, I don't need that original consolidation to be profitable. That old low doesn't have to be taken out. So if it goes there and goes through it, wonderful. I have limit orders down there to get me out. But I'm taking something out in the event that that low is guarded, or if that high is guarded, it's not going to be allowed to be breached. So I ended up creating a model that has repeating characteristics that became something that I could actually trade. And I would go in, I'd say, okay, well, I know it's not going to do this because it's all these things listed as precursors that this is why it shouldn't do it. Even though it looks technically sound that it's going to trade out there, every school of thought says it's going to go there. Supply and demand, Elliott wave, Wyckoff, you name it. There's all kinds of reasons why that high should be engaged. But if all these factors are there, and there's a list of things that I'll share in the fall months of this year, if they're in opposition with one another, they're diametrically opposed, that high or that low is not getting taken out. And it'll be a rip going the other direction.